lakhs of salaried employee get a shock from the January because the salary drops, and in some of the cases there is no salary in the month of February and March. Why this happens? The employer is required to deduct tax at source (TDS) at average rate of income tax, and hence such situation should not arise. We should examine the key three reasons for such TDS shocks. Reason 1. You have filed a declaration in Form 12BB to your employer claiming certain exemptions and deductions, but finally failed to produce the evidences to your employer, or you change the tax regime in which such exemption or deduction are not allowable. Then your employer is required to adjust the shortfall of TDS in the remaining 3 months from January to March. Second reason, you may have declared the other income such as interest, dividend, professional income, or even cases where ESOP option has been exercised. Then the TDS liability increases and the employer has to deduct the TDS in remaining 3 months. That is the second TDS shock. There's third reason behind this. When you change your employment, you have an option to file form number 12B indicating the emoluments received from previous employer, TDS deducted, and other details, so that your present employer can take into consideration such income and TDS made to deduct the TDS in remaining 3 months. This increases the TDS liability and result in TDS shock. So, if you want to avoid these shocks, ensure that the Form 12BB, when you submit it, the correct disclosures should be made and proofs or evidence should be produced to employer in time. If you earn additional income, show at the time when it's earned, not at the end of the financial year. And if you change the employment, submit the form number 12B at the earliest to avoid such TDS shock. Stay compliant, avoid such TDS shocks.